Your Morning Trade Live. Amazon shares are up nearly 40% from the tariff-induced April lows, but in 2025, the stock is underperforming its Mag 7 cohorts. It's actually flat for the year, while 5 of the other Mag 7 stocks are up at least 15% in 2025. Apple is the other laggard in the group. It's up a little more than 5% year to date. Let's talk about it. Let's go inside out on Amazon. Joining us now is Stephen Dickens, CEO and Principal Analyst at Hyperframe Research. Happy Friday to you, Stephen. Thanks so much for coming in.
Hey, Sam. Thanks for having me on the show.
So how are you looking at Amazon? I mean, why has it been such an underperformer?
Well, I mean, from looking at the fundamentals, they're exposed to the AI trade, so I don't understand how this place works from a valuation and markets point of view. When I look at the fundamentals of the tech, I mean, it's the sheer breadth for me. Just look at what they've announced this week. Partnership with the NBA to be the technology partner for the WNBA and the NBA using AWS. They also announced a whole raft of devices earlier on in the week. So Amazon Echoes, TVs, Fire, Kindles. So they've got sort of everything from that consumer side with Prime, obviously what we know, and sort of those parcels that keep turning up at my house on a regular basis. So you've got that side of their business, huge ad business. But then the business I spend the most time with, AWS, fantastically positioned for that AI sort of infrastructure sort of wave that we're seeing hitting all of the big Mag 7s and the sort of Broadcom that you mentioned.
Yeah.
So I think for me, doesn't make sense. Perfectly positioned company, really broad portfolio, ability to profit across the whole spectrum.
Okay, so I suppose it's a bit of a head scratcher in your mind. You know, we've also had the announcement about groceries as well, things like that. But, you know, when we talk about this name, a lot of people think about AWS.
Yes.
So, I mean, I hear your point as well. What are you expecting to hear from this company this time around as far as the earnings?
So, they'll probably announce at the end of the month. Soon after is their big tech event. I'm going out to spend some time with them in Vegas, get a chance to meet with all their leadership team. They sort of have their big annual event, AWS reInvent, which is the week after Thanksgiving. They drop a whole raft of announcements. I'm expecting to see custom silicon, what they're doing with Inferentia, Trainium. So they're right down into the silicon space, and then just services on top of that. AI services, updates to their frontier models with Nova. I'm expecting SageMaker updates. They announced an agentic IDE for developers, Kiro. Got some fantastic early reads on the adoption of that, so expecting more. Just that event, we all joke, it is a drop fest when it comes to announcements, and there's going to be a lot to consume. Really expecting a lot in that AI space from AWS, and that'll power them through the year.
Okay. You know, we talk a lot about, you know, the CapEx, the eye-watering numbers that all these companies have been throwing out there, particularly in the previous earnings season. You know, when we talk about artificial intelligence, there's been a lot of questions, as you mentioned, about stretch valuations, whether we're in this sort of AI bubble. There's also this whole question out there in the market of, you know, show me proof of all this spend. Where does Amazon sit in the grand scheme of things, you know, as far as the valuation story, but also with regards to the competition and, you know, whether you see that we're in an AI bubble?
Well, they're really well placed. As I mentioned, they're investing down in that custom silicon.
Yeah.
They're going to have their own proposition, Inferentia and Trainium. Well positioned for maybe some of those workloads that don't need a cutting edge GPU from NVIDIA, but there's going to be a whole raft of those, particularly in inference. See that exploding. Then you look at what they're doing with regard to around some of the services. I mentioned Kiro, SageMaker, Q. They've got a whole raft. So I see them really well positioned for to benefit from the wider pull through on AI. And then you look at their partnership with Anthropic, their huge investment in Anthropic. So they've got all the bases covered. And I don't know why they're not benefiting from the overall upswing we're seeing with the AI trade more generally across the rest of the sector.
Okay, but no doubt while that is very much a focal point, I mean, it does have a few sort of revenue streams. It is very sort of diversified as a business, but we're going to leave it there, Stephen. Thank you so much for getting us across some of the fundamentals and what you're watching out for as far as the earnings are concerned. Stephen Dickens, CEO and Principal Analyst, Hyperframe Research, thanks so much. We'll trade it now with Tom White, host of Fast Market. You've got a pair of example trades. Run us through those. Tom, good morning to you. Happy Friday.
Happy Friday, Sam. Yeah, Amazon, they report earnings at the end of October. I think that's going to be a key event. They've got Prime Days next week on the retail side. That's going to be big next week also. So you got to take that into consideration. But I kind of looked at a couple different strategies. They're the same directional bias, but the first one's a little bit more aggressive than the second one. And going out to the October 24th weekly options. So you're going to avoid that earnings event, which takes place a week later, while still maybe capturing some upside. Typically, we'll see the analysts come out ahead of this report if they think it's going to be good and maybe start up in that price target. So looked at a bullish call vertical here in the October 24th weekly cycle. We're going to buy the slightly out of the money 225 strike call. And then against it to offset some of the costs on the purchase of that bullish call, we're going to sell the 235 strike call. So a bullish $10 wide call vertical, you're going to pay roughly about a $3.50 debit for it. The debit you pay is going to be your risk, $350 per spread. That can expand to $10 if we get above 235 over the next 21 days. The break even on this one, 228.50 to the upside. So you do need a move of over 2% to the upside to get above that break even here. So that's the kind of way, a little bit more aggressive, low implied volatility levels at this point. So that lowers the input costs on this type of trade.
Okay, and I believe you're looking at a more sort of neutral to bullish example trade on this name as well, Tom?
Yeah, same type of directional bias, but maybe giving yourself, it's a little bit more passive, right? But it's a kind of a twofold type of trade where it's bullish, but if the stock does drop, you have that opportunity to potentially purchase the shares. So going out to that same October 24th weekly option series, 3 weeks to expiration on this one, we're going to sell a cash secured put. We're going to sell that 215 strike put. You're going to collect a credit of about $2.70 on this put. Now, if the stock stays above 215 over the next 3 weeks, you just get to keep that credit that you collected, $270 per put that you sell. Now, if the stock does start to fall and goes below 215, you'd have to purchase the shares if you were still short that put at expiration. But it takes your break even on this one down to 212.30 to the downside. So you're giving yourself that 5% cushion from the current share price before you start getting hurt on this trade. Now, this is a trade, it's pretty capital intensive because you're short a naked put with the expectations, hey, if it stays above 215, I'm just profitable, right? But on the other hand, if you want to purchase the shares and maybe if you put a 212.30 bid in the stock, it might never get filled. But if it does fall below 215, you'd have to buy the shares. That's about $21,300 is the capital required for that. So it's kind of twofold. You either want to keep that credit you collected or you're willing to buy the shares if we do see a pullback in Amazon over the next 3 weeks.
Okay, we'll be watching for now at least. Amazon sitting up 0.2% higher at 222 and change right now. Obviously, all eyes on those earnings that'll be coming up. Thank you so much for that, Tom White.